What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
Hey everyone, thanks again for tuning in to another episode of The Last Trade. This was really one of my favorites. We had our special guests, Josh McNeil and Greg Hoffmeister, chiming in to touch on everything global macro, what's happening in the markets, new product launches in the Bitcoin space, and then ultimately a little bit about their journey in Bitcoin and then finding OnRamp. At the end of the day, OnRamp aims to be the trusted guide for clients' wealth, and we touched on a lot of the concepts that you guys are probably familiar with when it comes to how do you secure long-term wealth when it comes to Bitcoin. How do you think about passing it to your family? A lot of individuals have significant others that want nothing to do with self-custody, and how do they figure it out? God forbid something happens to them. So it was a really awesome show, talked about a lot. If you like the show, please like and subscribe. And then also, if you're not ready to talk with us, I would really highly suggest subscribing to our research. We're going to have some special announcements for OnRamp subscribers to our email list, where we're going to be launching some really nice new features that I think you're going to be excited about that don't relate to exactly having to move your assets over today. Again, onrampbitcoin.com, you can go and subscribe, and then you'll be first to know about this new promotion we'll be releasing in the coming weeks. Hope you enjoy the show.
All right, welcome back to The Last Trade. Look at this. We have 5 of us on the podcast today. I think we're on a streak right now for 5 heads on The Last Trade, maybe 3 or 4 weeks in a row. But this one's a different one, and so really excited to get into it. We have a different crew than usual, so for those who are not on YouTube or following along on video, I could call everyone out real quick. We have Michael Tanguma. We know who Michael is. We don't need to talk much about him. Cam Stromey, who's actually the head of private wealth here at OnRamp. And then we're joined by Josh McNeil and Greg Hoffmeister. Josh, Greg, great to see you guys. Thanks for joining us. How are you two doing?
Thanks for having us on the pod.
Yeah, thanks for having us. It's great to be a part of it.
Yeah,
we were just talking the last time we were all together. We may not know this because I definitely don't know if I chatted with Greg, but we were at the rooftop in the Thompson in Nashville at the last Bitcoin 2024 event. So this is us reconnecting about a year later.
Yeah, with
that was
clear
a great
heads.
get together.
Yeah, with clear minds today on the podcast. So let's get into it. So we're going to kind of do this in 2 big segments. So before we get into more about Greg and Josh, they have a lot of wisdom and insights to share about their personal stories venturing into this space. Before we do that, though, we're going to just kind of kick things off, go around the horn. Everyone was tasked to bring some sort of story, topic, theme, news they've been thinking about, and we'll just kind of go around the horn, riff on that. There's no shortage of things to talk about. I was actually just on a quick trip to Boston past 24 hours, and I feel like I missed a month of news. So I'm actually relying on you guys to help catch me up a bit. And so we'll toss it over to Michael first, the resident podcast expert. His title is CEO, but actually all he does is record podcasts. So Michael, why don't we pull up your topic for this week? I can pull it up for us, and you can give us some color here. Or I could play the video.
Well, while you're pulling it up, I just want to say that Jackson, I feel like, needs to go to more events because we're pre-pod, because the energy at this level, starting this pod, is what I'd love to see every week. I feel like you're just reeling from the energy from last night. And I'm not sure how I ended up in this pod situation, but we just finished recording one with Brahm. That was pretty good. So this will be another one.
Yeah, I think so. I might just be overcompensating for a bit of a hangover that I'm nursing right now. So that could be the high energy. But here we go. Let's play this clip real quick.
Yeah. So just before you play the clip, as Jackson said, we brought some topics across the board. It's kind of fun because I think some people might know other people's topics. I don't actually. So it's going to be good to riff and come back with just notable things referencing what's discussed. On this topic, it's effectively, it says Coinbase head of institutional trading, institutions and sovereign wealth funds are quietly buying Bitcoin or have been in April. And so we'll go ahead and play the clip and then we can do some commentary on it for about 60 seconds, I think, to the 1:30.
Right. Well, first of all, thanks for having me. It's great to be back on. So when we talk about decoupling, we're really talking about neutral to negative correlation. And more specifically, we're talking about negative correlation when market's panicking on the downside. Nobody minds correlation when it's upside correlation. So, first and foremost, got to be super careful, right? This is a relatively short-term data set, April. You don't want to assume it's going to persist. I could be making a fool of myself right now, and today it could jump to a 1 correlation. The other thing you want to be careful about is, even if we understood exactly the reasons, and I'll get into what we think they are, just because this occurred now, it doesn't mean if that similar set of events occurred, we'd have exactly the same behavior. So just a disclaimer, be very, very careful. And that applies to gold, that applies to any asset. So the nice thing about my position is I don't have to guess as to what traders are thinking. We're kind of the center of the crypto ecosystem. So when you called me, I made a bunch of calls. And the pools of capital that have been buying during April, sovereign wealth funds, large institutional, long-term duration pools of capital, they're looking at it basically 3 ways. One is...
all right. I don't know if we have to listen to all 3 unless you want to, Michael.
No, they were effectively where he finishes that sentence is the different large pools of capital are looking at gold, looking at it from a non-sovereign store of value, the price performance as it relates to equities and other assets, the past, call it 6 months, let alone year and a half. And he's explaining how that's in front of everyone's mind, the divergence from the equity markets, and then ultimately that feeling of, well, did I miss this? And what else looks like this asset, this kind of like scarce, divisible, again, non-sovereign. And then he references Bitcoin. And that's the next thing they're going to look at, because when you have to go down the risk, we all know that. But I thought that was super interesting that this is becoming, as we have more and more of these conversations historically, it's so hard to have a conversation with an institution, pension endowment, when it comes through, well, what is Bitcoin? What's its use case? Is it speculative? It looks like crypto. I'm okay with missing it because it's only 1% of my portfolio either way. Versus this narrative is now going into the mainstream of, with high inflation, with tariffs, with, a moving monetary order. Now, different institutions, different portfolio allocations are going to start looking at, what does my personal account look like as it compares to equities, bonds, and then do I want some gold or Bitcoin, which is just a seismic change versus 6 months ago, let alone 6 years ago.
Yeah, what's interesting there as well is that this guy, I forget his title, but he's at Coinbase, maybe head of institutional trading, and he said that they're at the center of this industry or ecosystem. He's the center of the universe, and you heard it here first, that institutions are buying Bitcoin like you cannot believe. What I always think is interesting, though, I like to parse back those headlines. What I was paying attention to that does tie into this is the ETF inflows have been starting to uptick after a couple of months of really muted flows. Like, there wasn't a ton of inflows, there wasn't a ton of outflows into the Bitcoin ETF products. But as soon as the price starts to run up and break out of this consolidation period, I think it was just this week, or it could have been the end of last week, there were really significant inflows into the Bitcoin ETF ecosystem. And so that's largely retail buying, I believe. But perhaps what this individual, I forget his name, said is that the institutions are actually going direct to spot Bitcoin. And so perhaps they're more sophisticated. They're actually buying Bitcoin over the counter or on exchanges. But the retail buyer, the appetite is there as well, but they're now gobbling up the ETFs. What do you guys think about it?
I think it's retail. I think it's been retail when we saw the big flows. I think we sort of hit a boring phase there, where there wasn't a whole lot going on, but we knew these institutions were coming. I do believe they're going to buy it and hold it themselves. I don't think the institutions are going to, for instance, this 21 announcement, I think that's going to be held in custody outside of the ETFs. But yeah, I think that I think a little bit of FOMO is finally kicking in here with that price move last week, and I think it'll continue.
I think what we're witnessing, and everybody on this call, we sort of keep up with the headlines on a daily basis, but I think what's happening is a lot of people are sort of waiting for this big event to happen, for everything to sort of kick into gear. And I think it's kicking into gear every day, with small slices, and this is just another example of sovereigns, identifying sovereigns as buying Bitcoin, in the month of April. It's like, well, it's not a surprise, right? Like the United States, started a Bitcoin strategic reserve. Like, what do you think people are going to do? And and a lot of people are just sort of like not, outside of our spheres, like aren't paying attention. And so like all these balls are just sort of dropping one at a time. And it is happening, it's just not going to be like a one day event. Where we'll wake up in 5 years or whatever. It's like, how did this happen? It's like, well, it just dripped every day for the last 5 years and you weren't paying attention. But this is just another headline, I think, reinforcing that.
There is a quiet nature to that. I was actually just speaking with an individual who works for a private wealth firm, so kind of the similar on-ramp equivalent, but in the traditional financial world, working with families who are $100 million net worth plus. And he's saying, generally they haven't shown a whole lot of interest in Bitcoin, but their ETF desk has really been receiving a lot of interest over the last, call it 6 to 12 months. So I think that lines up with what you're saying, Josh and Greg. I mean, it's happening quietly. It's still not at scale where every client is frantically calling and demanding spot exposure or demanding the sophisticated vehicles that we offer. I'm not seeing like a massive uptick from my desk in terms of new entrants to the market, but certainly that more top of funnel ETF product is seeing a lot of inflows from high net worth, ultra high net worth folks who realize they want exposure. They're going through their traditional channels, calling their guy or girl and telling them to place an order.
Yeah, and to just like distill all this, I think there's a chart that came out from Big Fund, Eric Weiss. I think it was credited to him in his newsletter, but it's basically showing post like the tariff situation and the best performing assets. And you saw Bitcoin sitting at the top, like plus 10%. Gold, I think was like,
whoa. Easy, man. This was my topic.
Whoa.
But just framing it back to this conversation, it's really more of the just the narrative shift on this is changing from a speculative asset to something different. And I think that is very big because given all the macro tailwinds with the tariffs post-election, this thing sitting close to 100K is pretty wild when you think about it, all things considered, especially how equities have been hit. So that's kind of like that idea of once this really gets into the narrative and the zeitgeist that this is a risk-off asset, which we've all been talking about for years, you can see that, like if you squint, becoming a reality. And I think that's just like pretty crazy to really think about that it might actually be happening.
Yeah, what I think, I totally agree with all that. I'm just trying to parse out whether like how much of the retail buying in the ETFs actually understands Bitcoin's risk-off nature versus just chasing the price performance and seeing a couple of positive days, and now the brain is just like, I need to smash buy this right now. And the funny thing is, it's not even isolated to retail investors. I remember seeing this on Wall Street firms where I would be speaking to family offices and ultra high net worth individuals, and they would be looking at all these different hedge funds that we had on platform. And they would just be like, put me into the fund that performed the best in 2020, whatever it was, 2019, like the prior year. But it was like, well, maybe, yeah, exactly. But it was like, well, maybe this fund is actually more aligned with what goals that you've shared on this call. But they're like, no, I want the long bias TMT hedge fund that performed 45% last year. Put me into that. I'm like, all right, well, sure.
I was just going to say, like, what I think is interesting is, and it sort of is a topic or a theme that probably will go throughout like everybody's headlines here, but it's like when you're buying an ETF or you're chasing the return, on a derivative, like that's stimulating retail. But I think people are missing like the huge opportunity, obviously, which is like being able to hold the underlying, like, and there's so many people that are going to miss that opportunity. Like they're gonna see the returns in the ETF, in their ETF, in their MicroStrategy, whatever, and then I think sort of be happy with that in a short high time preference way, and then realize like, oh shoot, like I don't actually like own any of this myself, like I don't know where that comes into it, but like I feel like a lot of like the new wave coming in, it's just like they're not even realizing how important that is and just going right to the derivative and saying, hey, I'll play this way.
The beauty of like that is we've seen this since Bitcoin's existence. Like I liken the ETFs to Cash App with just different size. When somebody first buys Bitcoin, they don't even know what they're buying. You buy a little bit, and then you either, start to look, you have a positive bias because you own some, so it's inherent. And then ultimately you just start listening to pods like this and going deeper down the rabbit hole. And even if you don't, the beauty is you don't have to do anything because, number go up technology does the rest. And then you wonder, why did this thing just quadruple? And then you go down that rabbit hole. And again, it's not ideologically driven. It's literally like just self-preservation. You don't want things sitting on Coinbase or BlackRock as your counterparty when you realize for 15 years that hasn't worked very well.
But
So
I
like
guess,
that's the
yeah, well, I think I agree with you, and I just wonder, but I wonder like what the percentage is of let's just say a group of 100 people that have exposure that way. How many get triggered to go down the rabbit hole to spend the time to learn more, or you know what I mean? Like I don't know, it's not 100%. You know what I mean? Like, but is it 50% or is it 20 or is it 10?
what I'm saying is like I think it's the same as it's always been, that there's always going to be a subset that will come in, get burned because what's going to happen, and this is going to like we're going to talk at a different point and I'm going to not try to talk about it, but like people are going to come into the ETF and they're like, oh, I want that thing that is going to outperform Bitcoin, and then they're going to go buy that other thing that's saying they're going to outperform Bitcoin, and they're going to end up with no Bitcoin. And then the other people are going to realize they actually want Bitcoin, and they're the ones that are going to end up with the coin, and there's going to be a percentage that get burned. And until this all like, this is just
Yeah.
what monetization in real time looks like. I like to think like thousands of years ago, people were getting burned trading their like shiny rock for some other like rock that was like mud, and somebody did it, and then they like were left holding the bag of dirt, and the other people were holding the gold. Like it's just happened over a longer time frame, and we weren't there to witness it or talk about it weekly on a podcast.
Well, we live
Fascinating.
in the echo chamber. We've all done our hundreds and hundreds of hours, but, um, it's an evolution for everyone. And people will get there. You just got to keep the guiding light. Once you know what we know, that we are still early. We're very early, and they'll all come eventually.
That's Josh, you hit it on the head. I mean, it's so easy to sit here and be like how do they not how does everyone not
Yeah,
know like they should have the underlying,
it's
because
frustrating.
we're already there, but like you're right, that's just another underscore of like how early we are
Yeah.
when you pull back and see all these headlines and everything's going crazy, and then you're like, oh my god, we're still really early here. Everyone will find it, at their time.
Yeah, totally agree. And we could tie this into this post here I wanted to pull up. Michael stole my thunder, so I'm disappointed and sad, and I'm not as excited as I was at the start of the podcast. But
This isn't the one I was referring to, by the way.
no, I know what but this is similar. And I'm just messing around, man. Don't take it personally. But I don't know what to make of. I know the aim here is to show the difference between Bitcoin and gold as well, the price performance in the past 3 weeks or so since the tariff announcements on April 2nd, compared to the drawdown that's been seen in the Magnificent Seven. I hate that term, but I'll say it anyway. I think that the retail, so if I flip to this other tab here real quick, this is the inflows. I was looking for this while you guys were talking about the ETFs. And so you can see here, it's been over a quarter. Really, it looks like early January or mid-January was the last day that $1 billion was eclipsed in terms of ETF inflows.
Oh, wow.
And so we didn't quite hit that recently, but we got close, $900 million into the Bitcoin ETF complex in a single day. And then you can see, certainly in Q4 last year, there were a lot of those days, especially around the election and people excited about what the Trump administration would mean for the Bitcoin price. And so going back to this, I have a couple of different thoughts here. The first is I still think that most of those investors are looking at something like this and they think of Bitcoin technology, speculation, risk on, and that explains this chart here. I don't think that the inflows are actually representative of people understanding yet that Bitcoin is risk off, similar to gold. I think that's true at the larger pools of capital and the institutional investors. That ties into what that guy at Coinbase said about de-dollarization and de-risking. We didn't get that far into the clip, but that kind of is the direction that he goes in. And so I think the really important thing to hammer home here is that Americans in particular have a crazy amount of their wealth concentrated in the U.S. equity markets. It's been the de facto savings account for Americans for a couple of decades now. And so when you look at something like this, and I'm not one to cherry pick or pick on 3 weeks of price action and make a conclusion from it, but I would think that people are starting to more critically think about how they actually have themselves set up for their financial future. Because if you are in 80%, 90%, 75%, or 60-40 in equity markets, and you're seeing what is predominantly these 7 companies are like 25 or 30% of an index of 500 companies, and they're all down about 10% in just a few weeks, I think people are starting to feel the crunch a little bit, and perhaps there's going to be a recognition here soon that we are in a different environment, that there's a lot of volatility from fiscal policy and just political comments to trade uncertainty to are these companies actually overvalued? Do they trade down to lower PEs at some point? And then you have Bitcoin and gold, which are just these proxies for sound money, for a hedge against the instability of the fiat system and just the reckless fiscal spending as well as the inevitable debasement. And so I don't think many investors are here yet. I still think that people are just kind of following the price action and the trend. But perhaps if this persists for a while, where you continue to see a bleed out from tech equities and Bitcoin and gold moving in parallel go higher, I wonder if that will start to set off some light bulbs.
I'll take the opposite side of that in the sense of I do think it is people buying it for what you described. They aren't buying it in the sense of like so gold being up 5% and whatever it is up the past 6 months. I forgot the exact number, but I think it's like $175 to $300 in gold moves is equivalent of a total Bitcoin market cap. So when you see those gold moves and that flow, a small subset of that is either taking two sides of the position, some gold, some BTC, or is like, hey, gold, as to the point of that institutional guy from Coinbase, is aligning with that thesis of inflation, debasement, hard asset, is taking that ETF inflow. It's just not in a way that, the way that they're used to buying assets via ETFs. And the main reason I say that is to what Cam said, and it's how it felt for the past 12 to 18 months. While the price has risen, we haven't seen a lot of retail buyers step in, and I'm not convinced they're buying through their brokerage. I know that's that's a generalization, but I think this is majority hedge fund driven. We know we had whatever X or whatever the new things launching, buying Bitcoin. We know MSTR is stacking. GameStop's rumored to be purchasing right now or previously already has. I think that's some of the positions movement or like positioning that has caused this movement. It's not necessarily like retail chasing price. I mean, obviously that's a part of it, but I think the thesis is in, and that's where it's called. That's what has caused the divergence from equities and then gold and Bitcoin.
I think
I
that's
also
right
think
because
that
we'll joke
gold,
internally that. Oh, well, not joke, but we'll just comment internally that in a large part, on a day-to-day basis, it seems like we're still in a bear market where, Josh, Greg, you guys have all been around the block now in Bitcoin for a number of years. And so are all of my clients and people that we speak with that are prospective clients. They're all very savvy Bitcoin investors by this point. So that leads me to believe, too, it's either, some small subset of ultra high net worth individuals getting access through ETFs, but largely institutions that are now coming in size.
Yeah, and I think if you think of the nature of gold, obviously we know nation states were moving a lot of physical gold around, and that price action has been phenomenal. Unlike we've seen in that equity or in that asset. And as we've seen this week, it's cooled off quite a bit. It's cooled off this week as Bitcoin took a run. I wouldn't be surprised to see some of that. Of course, a lot of gold is held long term, but that price move brought a lot of money in, and I think that was a pretty profound move. And I think some of that money might be migrating our way now as well. At 3,400, there are going to be some natural sellers in that market.
Yeah, 100%.
Yeah, let's pivot to one of the bigger news items of this week. Greg, it was I believe your topic that you flagged here. So if you want to give some opening remarks as I pull it up, wanted to talk about 21. I saw this yesterday. I was like, what the hell, man?
Yeah.
I didn't even have time to process it in my travels. So, Greg, can you give us like a high level recap about what's going on here?
Yeah. So, I mean, I felt the same. I flipped up my Twitter feed and saw this headline, and I took me a minute to like process it as actually being real. But so what I gather is that there's a new company being formed um, by a few different players, and Cantor Fitzgerald being one, SoftBank. Uh, Michael, you can talk about them. I'm sure you're familiar with them through your WeWork days. Tether and Bitfinex are coming together to form a company called 21, basically to be a Bitcoin treasury company to compete with MicroStrategy and to execute a strategy of their own. Big money, big players, and then the icing on the cake is that they've tapped Jack Mallers to be the CEO of this new company, and I think the hope is that they're going to through a SPAC trade publicly. And I don't know all the details about that, but I mean, this is big news with big dollars being thrown around, big players, global players, a lot of things to talk about here.
And with the stated,
42,000 Bitcoin day one. It immediately makes them the number two corporate holder.
2 or 3, yeah.
Josh and Greg, are either one of you guys strategy enthusiasts? MSTR?
I have a small portion of it. I have a small position in it, basically because some of my investment vehicles, IRAs, et cetera, I really didn't have direct access. So it's only where I can't do Bitcoin direct. I understand the benefits. I like Michael Saylor a lot. He's been a big part of my education. And I think he's running a hell of a strategy. It's just not going to be my primary vehicle.
Totally exactly the same, Josh. I have a little bit of exposure, but would never venture there, without having a core Bitcoin stack before entering that space.
That's a prudent strategy, and I think it's one that many people have forgotten this cycle. The reason why I asked though was because Greg, you had pointed out that 21 made it clear that they want to compete directly with strategy on this corporate treasury Bitcoin playbook. So I was curious if either one of you how closely you follow strategy, and what are your thoughts just on this new firm that's being stood up, and perhaps what differentiates them compared to strategy?
Well, I think they intend to compete head to head in certain ways with strategy. In terms of tapping the financial markets to raise money and buy Bitcoin. But I think that what I've read, and I think I just skimmed through the deck that was on Twitter. I think they're going to try to infuse a little bit more, like maybe technology, maybe some core Bitcoin, based businesses to generate Bitcoin. And this is sort of like near and dear to OnRamp's heart, and using Bitcoin as the measuring stick of earnings, and then actually having businesses that are earning Bitcoin that can apply to the Bitcoin per share. So I mean, Mahler's kind of went off on that multiple times about that being the sort of the benchmark, Bitcoin per share, and using that to measure the success of the company. But so I think that's kind of where the differentiation is they're going to try to tap into, business strategies, business models that I think, try to generate Bitcoin. Whereas MicroStrategy is just sort of like borrow fiat, buy Bitcoin, do different tranches, play to different risk tolerances, and just keep raising fiat, buy Bitcoin. But and so I'd be curious what you think, what everyone else thinks about this.
I just look at NAV. I'll take either one of them. MicroStrategy certainly has an underlying operating unit that throws cash. This unit does not out of the gate. I think it's going to be difficult for Mahlers to lead a company that is sort of onboarding companies within that to throw cash. That then is part of the I think you're going to see 21 be more of a financial strategy. They're going to be doing much of what Michael Saylor's doing in the markets and the converts, et cetera. And I think they'll have a very hard time having operating units underneath throwing cash. But still, for me, it would just be, how much Bitcoin do they hold? And I'll buy that one this day. And if the NAVs deviate, I would take either. I think they're
I,
going to do a great job. I think it's a
It's
smart move
all
for.
yeah,
It's a smart move
it's
for
I
all
think
all.
vibes. It's all vibes,
Michael,
man. It's all vibes. So you got to get the vibes right. So like you mentioned the strategy of like there's no Bitcoin company really producing like outsized returns to affect a strategy at this scale. Same way like
Yeah.
MicroStrategy try to become, strategy and they have the dashboard. Like I think you'll see more and more of these do the vibes play in the sense of like its names, right? Like Tether, SoftBank, but it's all the same. It's arbitraging low interest rates to buy Bitcoin. What's interesting to me is I'll go to the positive because there's a lot of negatives, but I'm going to save them for another day. The positive is I think this accelerates and standardizes the fact that we've all known this. Like every company is going to hold Bitcoin on their balance sheet. They're going to need to because of deflationary environment, but also out of self-preservation, margin compression, just every macro tailwind we can talk about. In the same way an individual is going to hold Bitcoin. And so there's going to be this tipping point where public companies look at this and they're like, well, they're actually start getting penalized for not having some type of position once it becomes recognized, and more companies standardizing it. It's why Saylor open sources this playbook. It's the same reason where like we're waiting for people to launch multi-institution. We know they're working on it, but like when there's this open standard, more people are using it, it becomes uniform. The market recognizes, and that's the beauty of Bitcoin. The incentive is the competition actually strengthens the whole network relative like to the rest of markets are generally pretty zero sum. So I think that's the positive is that more companies are going to come in. They're going to get access to cheap debt. There's going to be more people try to set this up. But I will like, you look through their deck, they got a UBS banker from Russia. Like this is all vibes. It's like we got some names, we put it on there. There's nothing different through that deck that is going to be, to Josh's point, going to be able to go look at it and be like, oh, these guys. And at the end of the day, it's a trade because you still have to get out of it. And
That's
that's
right.
the negative. It's like you got to still get Bitcoin. And most people don't know how to leave the casino at the top. And so other than, the mess.
They're just drafting off they're drafting off MicroStrategy. Do you think Michael Saylor, when this was announced, goes, "Oh hell, I've got a new competitor"? No, he celebrates this. He's,
Yep.
I think, the Cantor in particular. If this thesis that MicroStrategy could become the Bitcoin bank someday, it's prudent for Cantor to be here. But I assure you, Michael Saylor is not concerned. He's probably celebrating this along with them.
what Michael, I'm interested. What do you think about SoftBank being involved and their sort of history? Funding startup companies. With large sums of money. I mean, and that's the only aspect that I think could be interesting. Like if they're in there, could this be like ultimately like a roll up strategy? Like start doing their playbook, but then they start to like pick off, Bitcoin native companies that have grown into something.
Yeah, I mean, like Tether, I like have a lot of respect for Tether and Cantor, not knowing as deep of their model, but like obviously they've been around for a long time. Like the SoftBank setup with crypto and Bitcoin is, in my opinion, like a huge flag more than anything. If you look at their history in the space, there's the tweet of Mayoshi-san buying 200 million back in 17 and referencing how he couldn't not look at the chart every second and was distracting, and it was only 1% of his portfolio. And then you look at their history of investments in FTX and being behind it. It's actually like Mayoshi-san's known as like being insane. It's like it's maybe a feature for him, not a bug. But you put when him like here's a good thing, and I'm just thinking of this out loud. You put him, Adam Newman, and there was always the quote where they're like, "Who wins in a fight? Who's smarter? Who's crazier?" And Masa was like, "It's who's crazier."
Yeah.
Think about it like this. You put somebody crazy with a crazy volatile asset and you say, here, go create some financial instruments in a fiat world with excess liquidity and let's all hope it ends up okay. It's like, yeah, I'm probably not going to take a bet on that.
See, and this is why, like, when I saw this come out, I thought, okay, it's great that we have more than just Michael Saylor as the one large champion for corporate adoption of Bitcoin, because he's doing it in such a scale that I don't think it helps other. It'd be curious here as to take like. It doesn't help them to take Bitcoin seriously because he's doing it to such an extent. He's an outlier. I don't think other executives know what to make of it. And then the same way here with 21, it's great that you have another voice that's going to be leading at a huge scale. So it's not just Saylor, but when you combine some of the previous investments of of SoftBank,
SoftBank.
or just the reputation of Tether, which like Tether has been used as kind of the punching bag for Bitcoin for years as FUD. So I think even generally that has permeated outside of Bitcoin, of people knowing, oh, where does this company sit? What do they do? You do have Cantor in the mix, which seems to have a much better and more traditional reputation. But I think that could be another instance where other executives are not going to exactly be spurred on to bring Bitcoin to the balance sheet because they don't know what to make of like kind of the collective reputations and the scale at which they're coming out. It's so outlandish, like 42,000 Bitcoin, as much as we may have our reasons for celebrating that.
Yeah, and one aspect that that I see happening is in the adoption phase is it relates to the internet. We're pre 2000 bubble. And what we're setting ourselves up for is the 2000 bubble with the amount of liquidity and commercialization of digital assets in Bitcoin. And this is effectively the early stages of that because as whether it's lending and getting more competitive and compressing that loan to value rate and effectively the volatility blowing people out because it's a 24/7 network that literally liquidates people on Thanksgiving nights and weekends. We've been there on the lending desk side that you are just setting up for the competition to get more esoteric, more complex. I'm sure you saw on Twitter the beautiful, chart on the org structure. Once things get outside of a few boxes in a LLC agreement, you kind of start to, kind of just go like this on. If I don't know if you've seen the FTX one, but the FTX one, yeah. So I think that's the bigger play here is the amount of liquidity. We're going to like really be happy when we see where the price goes. I think everyone here agrees we're probably going to go higher than we expect, but we're also with that as high, as fast as it goes, as fast as it falls, and we'll see a deleveraging. And Amazon came out of that and fundamental businesses came out, but there's no such thing as a free lunch. And if you can access cheap debt for free to buy Bitcoin and enrich yourselves, ultimately it's just not rooted in like practicality and gravity is gravity. It has to come down at some point.
Yeah, I don't have a whole lot to add to the conversation here. I was too busy working yesterday.
He means hungover.
I'd say one other thing. I mean,
Yes.
with Jack being tapped as the CEO, he's also come out today with a video saying he's absolutely staying as CEO of Strike. So, that's a tough challenge to be running two companies like that. So I don't know what he's really tasked with this 21 company. Maybe he's just the front man. Go talk, go do the interviews, go evangelize, do what you do basically. And now you wear another hat as well. I think it'll just be a challenge. It's hard enough to be the CEO of a small little company, and let alone two pretty significant ones.
Yeah.
So I wish him luck.
My initial reaction when I saw the news was, now this is some bull market news. I've just been looking at the price chart for months on end of just 80,000, and we actually didn't even bring up the price chart, which is my fault. We've been doing this at the start of every episode.
Yeah, we got out of your 80s.
I know. I almost feel like a brat for not pulling it up because I've been complaining week after week about being in the 80s, and then I didn't even pull up the price when we got to the 90s. So anyways, when I saw that news yesterday, I was like, all right, maybe we are in a bull market. This isn't going to happen in a bear market. So I'm encouraged. What do you guys think? One thing I did want to touch on was, Josh, you made a comment about hash rate before we hit record. So I want to get to that soon. But just any thoughts about this that we didn't cover already, just in terms of the past week, finally breaking through the mid to low 80s. We've been there for 2 months.
I think the Solana stuff is bull market news as well. It's related to price and what you referenced about publicly traded companies. I don't know if that's where you partially wanted to go, but Solana, what do they do? They're raising 500 million for
500 million.
the publicly traded company. I think this kind of underpins what we're talking about. It's like bull market's going to come and there's just going to be so much noise. You're going to hold on to your seat.
Leave it to Michael to be our resident crypto expert.
Yeah, Brian left, so Brian's out this week, so I had to, step in. Brian was former head of institutional research at Coinbase, and he was tasked begrudgingly to write about, gosh, I can't even remember the tokens. I think Filecoin and some other stuff.
Yeah, that
and we
was the one.
like to give them crap. Yeah.
No,
Yeah, it's too bad.
Michael, it's like it just adds to what you were saying earlier. This sort of if you're comparing this to the internet, pre 2000 run up. That's another headline that sort of starts pumping that bubble up a little bit.
Yeah, I think the beauty, and sometimes it's against the grain and it's not fun to hear, but I enjoy this because I just think, we'll see where it all shakes out, is there's pattern recognition in the past 15 years. Every couple years and every cycle, there's always something that takes people's Bitcoin, and at the time nobody ever realizes that it's taking their Bitcoin until after, and then everyone's like, oh shit, we should have known. And
Right.
we have friends that have been, Cam and I have worked with, and they're very principled and they call it out, and that's kind of how we've been taught, right? It's like, if you see something that doesn't make sense and you're trying to help your client and like just help them preserve their wealth, if it kind of like doesn't smell right, you should call it out. If they still do it, at least you can like go to sleep at night saying you brought it up.
Michael, you hit the altcoin uh, by talking Solana. I found it quite fascinating that as we made this big move, Bitcoin's dominance is really growing against the altcoins, and sort of traditionally, and if you look at the cycles, people chase those altcoins to try to get outsized returns, and many of them intend to move that to Bitcoin. They're trying to get an outsized return over there, either on MicroStrategy or altcoins, with the ultimate intention of landing at Bitcoin. But to your point, it's a good way to lose your Bitcoin. It's a good way to miss, because Bitcoin does what is it? Bitcoin has most of its gains in 10 days of the year, and the rest of the time it's rather it's a normal asset.
It's like going to the casino and being up on craps or whatever and being like, yeah, I'm going to take it off and roll it into, cash.
Yep.
And then you leave and you just have a hangover and you're like, what happened? You're like,
Yeah.
oh, what's
Where'd it
up?
go? I used to. Yeah.
That's one of the most disappointing aspects of seeing people sell their Bitcoin for strategy products, for equities. Like, I really can't believe that. I've been surprised. Like the altcoin thing, Josh, exactly. People have been chasing those gains and trying to catch up forever. And there's an element of humility of understanding Bitcoin at the time you did, and then going straight to it and not trying to play games around it. But people all come to it eventually. But man, trying to like having the thing, you have the end goal here. You've got the gold at the end of the rainbow, and then you sell it to go back and try to take the circuitous route back to Bitcoin. To me, is just been very surprising and disappointing.
And you don't want to disappoint Cam. You really look at this guy. You don't want to let him down. Don't sell your Bitcoin.
Rarely
and buy
down. Yeah,
strategies.
don't make me sad.
Yeah. Josh, what do you want to talk about on the hash rate side? Was there anything in particular you wanted to cover there?
Well, I sort of have two things that aren't as headline-ish that I think the correlation gap, which was mentioned in the Coinbase video you played earlier, that I find the correlation separation to the QQQs here since, for the past 14, 15 days, we had Independence Day, and then shortly thereafter, there started to be a divergence between the equities markets and Bitcoin. I find that fascinating. I think since, August of 2024-ish, there's been a really high correlation between the QQQs and equities and Bitcoin. And, the question is why or how. And if you look at the long-term chart, Bitcoin often correlates to the markets, but then when it breaks, it separates in a big way. And I think we're at the beginning of that separation. We're only a couple of weeks in. We'll see if it holds. But I find that interesting. The altcoin season, the difference this cycle. I find the gap in correlation. I think the QQQ the last 30 days is down 55 points, and Bitcoin's up over 7%. That's a pretty big divergence. After they had followed each other for 6 or 8 months. Bitcoin sort of bucking the tariff news. I think we all know the money printer is going to go burr. I think that's becoming a more known thing. The macro folks and us Bitcoiners know that's coming, but I don't think the everyday American understands that. I don't think they understand they're going to get 10 to 12% of their wealth destroyed per year in printing over the next 5 years. And then I also think there's this gold move and some level of knowledge in our community, and it's becoming more well known that this is a store of value, sort of it can be a risk off. A friend of ours, Michael, a friend of ours, Chris, over at Fidelity, sent me a note today, very interesting, that the Bitcoin vol is 10. This is the first time that it's been a lower vol than the QQQ. So are we really this wild and crazy thing? Are we really the same as it? No. Bitcoin is showing its own traits here in front of us in this micro 2 to 3 week window, and I find it fascinating. We can talk about hash rate too, Jackson, but I think you know the story. It's weird. No matter what's happening with price, hash rate used to follow Bitcoin price. People invested in mining Bitcoin when Bitcoin was going up. It doesn't matter what Bitcoin does. It can trade sideways. It can go down. This is a parabolic move from 2021. You see that dip there is where China banned it, and it's just up and to the right, far beyond the price of Bitcoin. This, to me, we're covering multiple subjects here. This is nation states. This is not Marathon, Riot, Core Scientific. This is not those guys. This is much bigger than that, and I don't know where it's coming from. Obviously, Pakistan announces they're going to use their excess energy to mine Bitcoin. I think there's a lot of mining going on at the nation state level that we cannot and have not quantified.
Yeah, it's very astute in the sense of that we've talked about this before. Like, there's some point of deviation in that chart where, like, we've heard rumored, certain countries are mining with nuclear energy, but then also this ties into the other point you made of the retrace has been pretty muted or dampened in what we have naturally seen in what's happened in a global macro scale. And it's because this new monetary reordering is already like baked in, or it's being baked behind the scenes, meaning people are stacking. They brought the gold home, right? And then they're stacking the BTC. And a form of that is sovereigns using their energy to take Bitcoin home, and this has been happening for the past 2 years. That's why, like, this, if it almost feels inorganic in that, like, parabolic move with the hash rate. And so, yeah, I think it kind of makes sense, the divergence, simply because it goes back to all of this kind of inspired this. Shoot, I don't know if I have. Yeah, I do. Was this, because it ties into like almost everything with the equities, whether it's QQQs or X or MSTR or whatever else you're buying. It's like at the end of the day where this is all heading, and they just haven't told everyone yet. That's why the price is only 100K, is gold and Bitcoin are money and everything else is credit. And unless you figure out how to hold those things in a way that reduces your counterparty risk, you have counterparty risk by the way of insolvencies, given the over-levered market. And once that is like known, because the emperor has no clothes starting to be seen, the volatility you said, there was a brief period we talked about like 3 weeks ago where Trump said a couple tweets, and literally it shows 20% of US GDP in 24 was wiped off and then brought back in a day. Like, imagine, you're retired and you're sitting there looking at your portfolio and you see, a third of or half of your retirement go away because of some tweets. Like, you have to start questioning like the fundamental value of what you're holding. And I think this is all happening behind the scenes, and it's just starting to become like mainstream reality over time.
And that's why we're in Bitcoin, because people have been forced into that position as well, in the sense that they have their money that they earn from whatever they do, and then they can't just leave it there. They have to do something with it. So then most people put it into equities or real estate, but then you have all this crazy shit going on in the world, and next thing you know, it's a month later and your net worth is down 10, 20%, and you're what's perceived to be the standard for preserving wealth, right? So you kind of think that, this is the prudent thing to do. I put my money into the S&P 500, I DCA, I open up these different retirement accounts, but that's not the way it should be, right? We should be able to just save in a better form of money. And so that's why, just to anchor back to the first principles of this conversation, that's why we're all excited about Bitcoin, is because it doesn't require us to become professional investors. I don't want to have to look at all these different Bitcoin products. It's not something I'm interested in. I'd rather just save in a better form of money and, do my work, hang out with my family. And so that's the challenging thing that people find themselves in these days, is they're forced into a corner. They have to do something with their money, but they don't yet know what money is, right? So they're hopefully part of what we do here is education. So I hope that we're at least moving the needle a little bit there.
Jackson, I think you hit it on the head. I mean, it's sort of the lack of financial literacy in general, and the lack of monetary like literacy, if you will, like what is money, that like people really need to start getting their head wrapped around that, and these are all examples of like, that sort of slowly happening, hopefully, more than we've seen in the past. But I mean, I just think that whether it's the hash rate, the nation states mining, this is a global phenomenon, like whether it's Brazil or Pakistan or Russia or China. I think I heard China and Russia are settling some energy trades potentially in Bitcoin. I mean, I'm sort of fast forwarding, but like this is going to be, Bitcoin is going to be something that you're going to want to like settle with, if you're providing value for something or someone, like ultimately, and I don't know the timeline on this, but like you're going to want that underlying, like as compensation. You're going to want to be paid, in that, not in credit, but in the underlying. And you just sort of, again, another little like slice of something happening, whether that's a true headline, China and Russia settling in Bitcoin, but that's proof right there. Like they're willing to exchange, commodity for Bitcoin and happy with it, settle, done, party to party, peer to peer, whatever you want. But I mean, that's sort of where it's headed,
It's such a great point because Jackson and I were on a call about 2 weeks ago with the family office, and we met him in New York the last time we were there for the Bitcoin Investor Week, and he followed up and he had a sizable position. He had spread around, but it was BlackRock and the ETF. And to make this like short, he basically couldn't wrap his head around why you would want the underlying. And it's this notion of like what you mentioned, Greg, like you may not need it today, but you may want to live in a world where you just can't get turned off when you log in your BlackRock account or Coinbase goes down and you lose it. Like it's just unfathomable. But this is the reality of like where certain individuals are because of, the standards that have been built around, accessibility. We've seen some debanking, but not at like levels that we've seen in other countries. We haven't seen the inflation, like all these things that are prevalent in other countries. So it's unfathomable for most of the market to recognize why they wouldn't want equity exposure into the underlying asset. But it goes back to your point. Once it becomes material, it's just innate to learn what you're actually holding that's material portion of your wealth. And that's how you end up learning all these concepts. That's part of the podcast, is just to help accelerate that if possible.
And I think another, like an example, and who knows when this will happen, but, I think it was Jackson or someone just mentioned, can you imagine sitting there, you're in your retirement and you're looking at your portfolio, like going down, 200, whatever, like 20%, you've lost $200,000 of value, let's say. And, well, like if you someday, you're going to be sitting there and just like holding the underlying Bitcoin and being like, who cares what's happening really? Like I have the Bitcoin and it's the unit of account. So like, I can just go out and continue to live my life. Do you know what I'm saying? Like, it's like, you're not going to be like measuring it in dollars, like eventually. But if you have a derivative and it's just sort of like representative and everything's being still looked at as dollar value, then yeah, you have angst over, the market going down 20%.
Everyone, hope you're enjoying the show, and thanks again for tuning in to the latest episode of The Last Trade. As a quick reminder, OnRamp offers multi-institution custody, the best of both worlds when it comes to not having to leave your assets on a third-party exchange, but also not having to go through the friction and lack of peace of mind when having to manage self-custody and think about, God forbid, what happens if something happens to your home, is in the sense of the West Coast wildfires or southeastern floods, or ultimately just, God forbid, things happen in life, and what happens if you're no longer around? How does your family actually preserve and protect their wealth and recover it ultimately? On top of that, we offer financial services across the board, from trading, lending, IRAs, Lloyd's of London-backed insurance, up to $100 million on accounts. And then we obviously have the new launch of the Guild for our private clients that want exposure to the Bitcoin network that we've accumulated over the past half decade, and also private equity investments in the space. If you want to learn more, please book a consultation or reach out to me directly at michael@onrampbitcoin.com. I hope you enjoy the rest of the episode.
This is a great segue, because one thing we touched on at the top of the show was we were going to get right into the action. And then on the back half, which I guess we did a little more than half, but that's okay. There's a lot of talk. There's a lot of things to talk about. But the back half, we wanted to talk more about like how did you actually come to all these conclusions, Josh and Greg? So you guys are the guests of the hour for the last trade this week. And so there's a lot of things embedded in what both of you have shared in the past hour on this show, but it's obvious that that's not just something that was learned in a matter of months or probably even a year. It was a far longer process as it is for most people. So I'm curious, and either one of you, whoever wants to share first, can you just kind of like walk us through, I guess, how did you even end up in this position to have a conversation like this today? How did this get on your radar? And, at what point did you start to take Bitcoin more seriously from just maybe being like something to trade or speculate on or not really understand?
Josh, go ahead.
Well, yeah, I ran a company for a long time. So I was busy and I did what everybody else does. All my buddies did. And I got a financial advisor. And so very traditional path. When I was younger, I gambled and bet on horses. And then I graduated to buying equities. And then I was playing around with penny stocks, trying to catch a big runner. And then eventually had enough wealth that I got a wealth advisor and got my 60-40 portfolio, and hell yeah, I was an adult. But ultimately, that doesn't work. It didn't perform for me, and so I've been searching and have been fortunate over the past 6 years or so to invest in private entities, which a lot of people don't have access to. But I sort of found that world and was fairly happy with it, but essentially you're locking up your capital, and it's gone. You don't know when it's coming back. Many of them fail. So I've been fortunate to catch a couple good private investments. But when I found Bitcoin, it came out of a private investment into a Bitcoin miner. As a private entity that we were just buying, we were putting the capital up front and then dispersing Bitcoin out the back as we mined it. And I got to looking at this investment and thinking, well, Bitcoin's got to get to like 120K for me to get my return out of this thing. And so this is over 3 years ago that I made this investment, 4 years ago. And then I got to thinking, why wouldn't I just own the underlying? The same discussion we had with MicroStrategy, altcoins. And so in middle to late 21, I started buying, and then I rode that horrible dip down into the 17s, 20s. But I had done my work, and through that period, I did a lot more work, and it was obvious to me that it was a once in a lifetime buying opportunity. And so, yeah, I slowly over the past, starting then to now, I've migrated out of most all investments that I have. I'm basically all in Bitcoin, except where I can't access the money. So from a traditional business background to finally accumulating some wealth, to then realizing I've got to preserve this wealth. 90% of everyone's life is focused on their P&L. I think Saylor says this, but people don't spend enough time on their balance sheet. We really, as an individual and as a leader of your family, you really got to focus on your balance sheet. And once I started focusing on my balance sheet, I was able to curate my family's situation much better. And then so that was the journey of how did I find Bitcoin, and then oh hell, that was just the beginning of hell. I had more stress when I started owning Bitcoin. How to accumulate it? A lot of sleepless nights when I was buying it at the lows. Am I being irresponsible for my family? And that is how I found you guys over the past couple of years, realizing, okay, I did find the right asset, but how the hell do I store this thing? I don't want it in my gun safe on this little device made in China. And that's where I had it. And so, the anxiety and the ups and downs of Bitcoin, they continue, but I've sort of found myself in all these gyrations that are happening in the world. I don't really worry that much about them. They don't bother me that much. I've got my corn and I've got it held in the best place in the world. And we could talk about my journey to sort of find multi-institution custody. But it's obviously the best solution in the world to have your Bitcoin, have it passed down generations. If you don't intend to sell it and flip it every day, of course you can do that within the on-ramp family. But I just want you guys to keep my stuff safe, and I can sleep at night, not worrying about somebody breaking into my home and taking it, or me forgetting it, or having to teach my wife or my children how to do this process of finding the seed phrase, the plastic device. So it's been a journey that I've finally found a really peaceful place here in the past 8 months.
Thanks for sharing that, Josh. And just for disclaimer, we did not pay Josh to say that. He pays us. So and he
I don't get a fee. I don't get my fees reduced.
before we wrap, I will reference our first conversation about the fee payment, because you told me something that I've never really shared. I'm going to share it on the show about the cost around custody. We'll save that for the end.
I guess I'll jump in here. For those who don't know, I was in the commercial real estate business for 25 years as a commercial real estate broker and entrepreneur, because I started my own company with 3 other partners. And we worked with companies, we represented them, we helped them negotiate their office leases and build outs and things of that nature. I retired from that in 2020 and decided I was going to sort of pursue a passion of mine, which was craft brewing, home brewing, and turn that into a little commercial operation. So for the past 2 years, I've been running a company my wife and I started called Doctor's Island Brewing Company. So that's where I am at the brewery right now. And so, providing value to the small community that we live in here south of Boston, Hull, Massachusetts. Great gathering place, bring a community together, and enjoying craft beer that they're brewing right here on site. The way I found Bitcoin was during my real estate career. We had an office in Palo Alto, and we had overspent on real estate for ourselves. We had much bigger space than we needed, so we had extra desks. And Michael will know this game because he was at WeWork, but this is sort of before WeWork took off. We used to desk share, and we would bring in small startup companies that we thought had potential to be our clients someday. When they raised more capital and started hiring hundreds of people, we would help them find their office space. But in the meantime, we would have a few desks for them. And this one company came in 2014 called Buttercoin, and they were 4 guys. They had seed funding, and they were like on their way to Series A. And they said, "Hey, can we pay you in Bitcoin for these desks while we sit here?" And my partners and I looked at each other. We're like, "What is that? What is he talking about?" And it was just the fact that they were a potential client of ours. We didn't want to alienate them. We thought they had a lot of potential to grow, and so we said, "Sure, pay us in Bitcoin for the desks. We'll get our fiat from the other empty seats in the office." So for about, I think it was 6 or 9 months, we opened up a Coinbase wallet, and they just kept putting in the equivalent rent in Bitcoin into our Coinbase wallet, and we kind of forgot about it because we were busy running our business, taking care of our clients, doing our traditional stuff. So never even thought about what they were doing. And eventually they didn't raise their Series A, and they went away. And we filled the desks and filled the seats with somebody else who was paying us in fiat. Fast forward about 2.5 years, or maybe 3 years, Q3 of 17, when the Bitcoin price started to run up to 5,000. We were in a partner meeting one day, and someone said "Hey, wait a minute, didn't we accept some of that for rent a few years ago?" And we had this mad scramble to see if we still had the Coinbase wallet. And my partner on the West Coast took half a day to try to figure out how to get into the Coinbase account and everything. And sure enough, there was Bitcoin in our Coinbase account. And then we just sort of watched it go up to 20,000 a coin, and we were all freaking out and going "Oh, we got to diversify." So we had another client who was running a crypto, a basket of crypto, sort of mutual fund or hedge, whatever. And so here's our my part of my story where I got involved in other cryptocurrencies. I took half of my Bitcoin from that rental excursion and put it into this Flipside fund, and eventually pretty much lost all that. But thankfully held on to the other portion of my my Bitcoin. And that's sort of my start to my journey, that 17, 18, and really started to be what am I holding here? Started listening to podcasts, getting educated, reading books. Had a real friend and partner of mine in the real estate business who was also sort of going down the rabbit hole with me, and that was very helpful to bounce ideas off each other. And like we would get in conference rooms and just literally for like 2 hours like talk about where this is headed and what starting to play out, like game theory and stuff like that. And this is where kind of the switch went off in my head. One day I was sitting in my office, I'm looking out and I'm talking to this young guy who's working for us, and I was trying to describe like Bitcoin to him, and I just was looking at this huge skyscraper out my window, and I was just like, and it just hit me, like I was like, someday, like there's like half a $500 million of like value in this like huge tower, and I was just like, oh my God, like if this thing plays out and like someday like Bitcoin's used as the unit of account, like it's gonna have to be so valuable, like to sort of suck in like the value of everything that exists in the world. Like, and I just like my head blew off, you know, and I was just like, oh my God. And that was sort of like the tipping point where I was just like, I got to accumulate, you know, as much as I can. But, you know, so to Josh's point, like in the early days there, I got the Bitcoin from Coinbase, and it went into like a soft wallet, like, and like I didn't know what was going on. I didn't know what I was doing or like how it worked. And then through some education, realized that wasn't like the right thing to be holding it on. And so I kind of went to a hard wallet. Like I think it was a Ledger was my first hardware device. And again, learned more. And then I think I went pretty quickly over to like a Casa solution where there was like multi-key solution. So I was kind of learning about that. In fact, Casa was like how I sort of started running my own node. At one point, their product it incorporated a node, which was kind of cool, and I started learning about that. But then from there, that's, I think, you know, years are going by now, and then I learned about Unchained, you know, multi-sig solution, and sort of incorporating a key holder, if you will, into the mix. And so then you have multiple keys you're managing. And so I did the same thing. Like I sort of like couldn't sleep at night, you know, I'm like, what if something happens to these things? And like, I feel a little bit better that I have this other key holder, but I'm still, you know, trying to describe this to my wife if something ever happened to me. And then I had to do the old, like, she's like, you have to write everything down, you know, like, and I was like, oh
Don't want to do that.
So then I'm like, I have this like 3 pages of like every little like thing, then click here, and like, you know, all this stupid like treasure map of like, God forbid something happened to me. And so, you know, you kind of go through this process of learning and feeling anxiety as like the value of what you're holding gets bigger and bigger, and you realize, just like, you know, you wouldn't walk around town with like $1 million in your back pocket in your wallet, you know, like you might walk around with 100. You just need a partner at some point to sort of help manage, you know, certain tiers of value, and that's sort of like where I'm at today. Is like I realize like it's not one size fits all for me. It's sort of like, you know, you want access at different times and different places and control in different ways for different amounts of value that you're managing or that you're under sort of control of. And I mean, when I found OnRamp, I just knew, because I already knew like multi-sig was like the way to go, and then like infusing it into like multi-institutions where different institutions are holding, and you're the quarterback, and you have a trusted partner like helping you through, you know, all kinds of things, whether it's inheritance or, you know, other financial, you know, products that you may need to tap into and through the course of your life. And as you get older and you start thinking about your kids and your grandkids and all the things that you sort of you dream about doing, you know, I love being sovereign. Like I love being like my own person, but like I also like relationships and like trusting people and like finding the right partner. Well, you know, just like finding your wife or whatever. I mean, and finding your best friends. Like you trust people, like, and you sort of have a core group, and that's kind of how I feel right now with OnRamp. I mean, I love being a part of it. I love the way it makes me feel. In terms of security and like fault tolerance and everything like that goes along with it. And I know we're like, you guys are on like an early I grew up, my whole business was working with like younger companies, and like you guys are sort of like this startup like financial powerhouse that I can just see like heading in the right direction. I want to be a part of it. I want to help see you guys like be successful, and because I know it's like going to provide incredible value to not only individuals but institutions, and hopefully maybe even beyond. So that's kind of my journey. And
Yeah, thank
I just wake up every day, like just pinching myself that like, we have the chance to be this early, that we have someone knocked us in the middle, knocked us on the head, and we realized like where this is going, and we got ahead of it. And I don't know. I mean, I'm not like knocking anybody. Like life moves fast. Like there's a lot going on. You're trying to do your job. You're trying to like do whatever, and like you're trying to build a family. You're trying to have relationships. Like there's a lot of noise, and you don't have like not everybody has like time to sit around and like dive deep on all these topics, and like they just kind of go headline to headline, and whether it's politics or sports games or it's just life is like filled with all kinds of stuff that distracts you, and so it's really hard to spend the time and carve it out of like your busy life to learn. And we talk about like all the education, it's like it's out there, but like what's really like hard is like people like opening up enough time in their life and their day to actually like absorb it at a deep level. So that's the challenge.
Yeah, thanks for sharing that, Greg. I think there was a lot that went into this. Cam and I personally have onboarded thousands of people, billions of dollars. And like you said, there's not a one size fits all, but we realized if we're going to get as many people into this asset and protect them, you have to like lower the barrier, so lower the friction from that learning, because some people just will leave it on the exchange because they don't feel comfortable like being self-sovereign. And then we saw people lose assets on BlockFi, or ultimately there's no like understanding of like what rock solid custody bulletproof financial services in Bitcoin. So they always are speculating. They're never thinking of this as a cornerstone of their portfolio, or like most people on this call where you're preserving the rest of your wealth. The sad part is our lives have gotten so much easier by holding a better form of money, and we can do more, and it gives more optionality. And we can't really fix the world until people have that access that doesn't require a lot of the friction. I like in what we're doing here to like the best analogy I've come up with is almost like Mosaic in the browser, and how that democratized the ability for everyone to get access to the World Wide Web, and how much value does that deliver when you can just have all the information in the world at your fingertips. This is very similar in my mind, that somebody can now spin up an account, and we'll be louder about this, but Cam and I used to have to ship the devices, do the onboarding. It would take anywhere between 2 to 8 weeks, if not longer. And that's just to get somebody set up. Now you have to instill the confidence to move the assets over, because to be honest, most people don't know how to reconstitute wallets, back up the seed phrase, tell their family member. You can write it down like you were going to, but then God forbid somebody finds what you wrote down. How do you reconstitute if the third party goes away? And this past week has been we've been talking to more clients about the guild, and I was shocked, like, how, not at how amazing a job Cam and the team have done, but the level of what this sentiment has been, where we talked to a guy saying, I was like, this sounds so fluffy that it's a lie, but it's not. The guy said, my wife has physically felt my presence be more calm because he was previously using a collaborative custody solution, and he just didn't understand it. And she was like, how am I supposed to get this? And now he's able to just like be normal with all of his wealth. And it was like a really kind of rewarding anecdote that we got shared. And then obviously you guys anecdotes as well are really impactful.
I want to share one other thing, which was my experience with OnRamp, and I think it sort of goes back to that, like that relationship and the trust and everything. And I had like built up a nice feeling with OnRamp, and particularly Cam, and I was going through the onboarding, I remember, and it was like, and you guys weren't quite there yet with like the whole integration or whatever, and I'm going through the on-ramp part, and I'm like putting in all my stuff. I'm like, okay, this is good, I trust these guys, and then it got to a point where like one of the other I was sort of needed to like put some information in relative to like the other institution that was going to hold a key, and it kind of just like went out of like your world and into their world, and I kind of froze, because I was like, wait a second, like I don't have like, I don't know these people, like, and I've never talked to them. And I remember talking to Cam about it. He's like, oh no, that's cool. Like, we're working on it, da, da, da. And like, you got it very quickly to a point where, it was sort of a seamless onboarding for me. at that point, like where it was like I stayed with on-ramp, it was right through your portal, onboarded all the other institutions, but I felt like you guys were like technically and sort of like with me the whole way, and that was like huge for me. That was like, I put up like a stop sign like right away when it was like, oh, we're going outside of like on-ramp, you got to do this over here. And I realized obviously they're a valued partner in the whole multi-institutional framework, but from an individual, like there's still human to human like contact that's important. So you guys have done a good job, maintaining your sort of like sphere of influence around the process. So hopefully other people will have a much smoother onboarding process than going forward.
Yeah, thanks for hanging with us through that, Greg. Like now it's to the point where our client can onboard in less than 10 minutes themselves, which is pretty phenomenal. So credit to the team that's built that. But I really appreciate you bringing up the points around some of the bigger themes around like trust and relationship aspect, because what you guys both shared is such an interesting journey where you find this great asset, you develop a thesis and conviction around it. Then you learn that there's a strange aspect of it of custody, which sends you down this really weird trajectory. And I'd love to hear if you guys have any anecdotes from your wives or family when they see you pulling out something out of the gun safe that's not a gun. They're like, what is that? And you're like, this is our wealth, or this is a growing part of it. This is where it all be stored, or you're in your office and you're like, I'm sorry, please take the kids out. Like I'm concentrating on something right now. And you're like writing down words. These moments of clairvoyance. But like also like what Michael's talked about this for years too, like you get to that point where you've got the ledger of the cold card and only you know where it is, but you feel that power and that sovereignty, and it's incredible because now you can send the equivalent of a wire any time of day or night. That is always powerful to maintain if you know how to use it. But you do feel that isolation aspect too, and you realize like how much most people value community and value having trusted partners, and you miss that relational aspect. Like finance, money is a tool that brings people together, right? It's all about trade and commerce in a peaceful way. So I think there's a lot of big themes that you kind of describing an emotional journey of like going off, being by yourself, and then coming back and saying, you know what, I do want to extend some trust. And even during that onboarding process, you're working with OnRamp, you're working with me, but the moment that you had to kind of veer out of that sphere of influence and trust with, a different partner, like, wait, well, I haven't quite given, it's like you're kind of trying to figure out where that trust lies and where you want that relationship to be.
Yeah, and this is just rooted in pragmatism. Again, this pod sometimes it gets, we truly have the most sophisticated clients, and they get what we're saying, but reality is the common narrative is we're all gonna like hold our keys and sing Kumbaya, and like that makes zero sense because we had gold, and gold we could have held it all in our cave. It's a bearer asset. And you can hold it in your citadel, but a bigger militia comes to your citadel. It's just not rooted in practicality of coordinating economic activity. Josh, I know you thought deeply about this, so curious, kind of adding to any of that.
Yeah. Cam said, it's this, you get this freedom and power and all, this autonomy that I've got it and I can fire it anywhere in the world at any time. Cool. Okay. That wears off real quick. That part wears off quick. What doesn't wear off is, am I going to lose this thing? And what if I have a fire? What if somebody breaks in? What if my kids are around town talking about my dad having Bitcoin? And then everyone's going to want this thing. And hell, how many people know that I've got it right here in my gun safe? Like that to me, it's just not something I can sleep on. Then I had, so I tried to get my wife to come in. Cam, this to your point of your family experiences. I tried to get my wife to sit down. And I mean, I was like, I barely showed her the device. And she's like, no, I'm out. Call one of your buddies. But what my wife wanted, what she wants and what she's always had her whole life, in fairness to her, is she wanted somebody to call. If something happens to you, I want somebody to call. I don't want to talk about you dying. I don't want to talk about any of this stuff. Like, no. And so I had to get my daughter, I have one daughter who's a really social mind and one who's a very analytical mind. So I had to sit my daughter down at 20 years old and go, okay, if something happens to dad, here's what you do. And it was just a horrible experience. And frankly, you guys, Michael, you know this. When you and I first talked, it took me 6 months to find OnRamp. I looked at every vehicle out there. ultimately, obviously, believe that this is the best solution for me and my family. And now Cam Strummy is my wife. She has Cam's number, and that's all she's got to do.
I love it. The thing that like, I'm pretty I don't like I've always been like this where I don't like celebrate a lot of successes because I think like you have to hold yourself to high standards and us as a team is very similar. So I'm saying that to like put gravity behind what you're saying, Greg, and why it was a little like clunky or the onboarding initially back in the day is when I first did a transaction for my own vault and went to a different third party that is completely independent and goes and has to go offline to a key ceremony, it was like magic for me. And I still think about that because I will hold to the end of my times, the difference between gold and Bitcoin is literally that you can embed governance into the underlying custody setup because that's where gold failed. And when you can custody an asset and it can scale appropriately with 5 institutions if you need it, they have legal frameworks because we still live in a rule of law, and you have to verify with an independent third party or they will never sign those keys and their whole business is dedicated to that. So the first time they don't sign for Josh, Greg, Cam, or anybody else or of our clients, their business is done. So why would they ever not sign that? And if they do, they can't halt your assets from moving or re-lend them out. You just go to the other two. There is like a real powerful moment there because the assets they're secured, auditable, on-chain, segregated, and then you have independent institutions that are cryptographically sharding and doing everything under the sun that, again, for individuals, no problem holding 10, 30%, whatever you're willing to lose, that's fine. But for all your wealth, it's just not rooted in practicality. That was behind where it's a technical feat to do this. This is why nobody's actually done this. Everybody wants to, everybody's working on it. But the problem is to actually go and get the key partners and have enough confidence and conviction in getting them to participate is one feat. Then to build it in a way that somebody can onboard within minutes. And then that's not even the hard part. The hard part is communicating it effectively like this versus the existing solutions. This was never theoretical. It was all built in practicality because I went through those trenches of shipping these little plastic hardware devices and onboarding individuals. And every person had these anecdotes of so in their life, firmware update, red screen, and they're like, not moving it over. $10 million, on NIDIG, not moving it over. Something else, FTX goes down, not moving it over. And then finally BlockFi blows up and they're like, screw it, send it into the ether. We're not leaving it on NIDIG. And that's what the pain it took to get them into collaborative custody. And then they're still uncomfortable with it. We're like, we got to build something better and also something for when the asset's 350,000 or 500K. Everyone that we're talking about, they just don't have the exposure you guys do because that pain will become so acute that, we're like, I joke and say everyone's just safeguarding the client's assets until they're ready for on ramp.
Yeah. I had a different experience than Greg. Cam, I think you would agree that I probably onboarded after Greg because for me it was quite simple. I was shocked at how easy it was, frankly. Every time you touch your Bitcoin, it scares the shit out of you. You have massive anxiety. And this was way less anxiety than setting up my plastic device. My plastic device literally had me having hives. But Cam, we just couple phone calls, couple logins, and it was done.
The favorite part about Josh's story is Josh has guns and will shoot someone, whether he admits it or not, but he doesn't want to have to. The people that say it's always the opposite. It's like similar, like Texas, they joke and like everyone waves, when you're driving, it's because everyone's packing. We're all friendly. But, when the time comes, you just don't want to, people in the South are a little different. And it's very similar to like everyone like likes to LARP about, they're going to be self-sovereign. All that. It's like nobody actually really wants to die for a trade or wants their family to die for a trade. And the ones willing to do it don't actually talk about it. And it's just been sad because it has kept people's assets safe to take them off exchanges. But the reality is like, what's the whole notion of when the facts change, I change my mind. What do you do? It's like the facts are changing. Like the price is 6 figures. There's different solutions now. It's not an ETF or a hardware device. Now, what are you going to do is like where we're at. And we just think about the practicalities. The price does its thing. Everyone else will realize it.
Man, one of our clients is a Marine that experienced, he was injured during combat in war, and he was like, I don't want to have to shoot somebody. I don't want to have to deal with this. I've got a family. So, and I look at him, muscly, he could not be more of a picturesque G.I. Joe. It's like, if he is feeling that way, a lot of other people are going to realize this pretty soon.
I mean, you still want to, again, for certain pieces of your wealth or whatever, you want to be able to control it and be able to move it and like and do things with it like at your own instruction, your own pace. Like I just went through this. I had to move some money from another investment account into into a bank checking account, and it took a week. And this was like about taxes and and it's like starting to get like kind of like, hey, we owe, like we need to write the check, you know what I mean? Like, and it took no lie, like it was 6 days like to get it from like me telling someone, hey, I want to move this into and seeing it in the account. It was 6 days. So,
and one thing to pull up, because I know we're coming up on time, but we also got to keep our boomers safe. We do our central point of failure of the week, and this came up this past week that the FBI says the Americans over 60 lost nearly $3 billion of crypto in 2024. Everything we're talking about, they want nothing to do with, and so they're going to get forced to go into the ETFs, and we all know, how bad of a product that is. And so, like, you can see this chart where it shows the numbers based on age over 60. And I reference, I talked about this on Brahms pod, like Snapchat. For anybody over a certain age, if they picked up Snapchat 5 years ago, like the way the screen is oriented, they don't even know how to use it. You got to flick in different numbers. It's very similar with like Bitcoin. Once you get to a certain age, like individuals want nothing to do with this. And they're also predisposed to social engineering, clicking the buttons, doing all these things. And these are the things that we're working to protect against. So there's a component of self-sovereign, but there's a component of the amount of sophisticated actors that are going to come into this space for our friends and family. Even if somebody's listening or we want to hold all of our Bitcoin on the hardware device, you want to protect your friends and family and give them a better vehicle than leaving it on an ETF or Coinbase.
I don't know if you saw Scott Melker, someone did a very sophisticated attack on he and his family. And someone lost $4 million. Actually, someone imitated Scott Melker, was able to use a fake ID. I mean, this is getting really real sophisticated. And Michael, to your point, we're so early. Like, this is a $85,000, $90,000, $95,000, $100,000 asset. That it's not going to be that in 2 years. You've got $50,000 of it or $100,000 of it. How are you going to behave when that's 15 million? You're not going to want $15 million of gold or cash or Bitcoin on a plastic device made in China. End of story.
What if it was made in Russia?
Yeah, that's fine.
Guys, this is amazing. We're gonna have to do maybe a quarterly or some kind of series. This was fun to chat through, and there's gonna be no shortage of stuff coming down the pike. We'll have to have you back on again.
Thanks for having us.
So fun. Yeah, thanks for having us.
Thanks,
you guys
gentlemen.
are doing a great job.
Thanks, guys.
Thanks, guys.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that OnRamp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.